Shall we have a serious conversation about how to obtain business credit for a new business without revenue? In other words, you're just sitting there, you have a startup, you have done everything correctly, and the business is up to speed, but you have no sales, no revenue, but you want to get business credit. Let's talk about that. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you are to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about business credit for a startup without revenue, okay? And the first thing you need to do, there are 7 steps I want you to pay attention to, okay? And I want you to write it down. First thing you need to do, please get legit. I want you to do everything to show a potential lender, a potential net 30 vendor that you are legit, you are serious. Did you get your EIN? Talk to me about that. Did you get your employer identification number? Okay. Have you thought about your legal structure? Big decision time, big decision time. You can actually get business credit for a new business without revenue, even if you are a sole proprietorship, but your chances are slim. So I want you to think deep about the kind of legal structure that will shield your personal assets from your business's assets. Okay, you can choose LLC, LLP, S Corp, C Corp, you name it. Your call. Think about articles of incorporation or articles of organization, depending on the legal structure that you choose. Okay, so when we talk about getting legit, we're talking also about having the accounting foundation that you need so that when somebody looks at your operation, the person thinks, this business is legit. You can have your business at home, but you need to provide the impression. First impression counts, right? You need to provide the impression that this is a business. This is a business whose operations are divorced from your personal affairs. Those two entities must be different. Your personal life must be different from your business life. So you want to set up accounting. When it comes to accounting, there are 3 things you can do. You can either hire someone locally. This can be a CPA, a certified public accountant, or just a bookkeeper, right? You don't need a CPA if you have a small operation, a very basic accounting function. So that's number 1. Number 2, you can do things yourself. You can actually buy software or subscribe to software such as QuickBooks. It will cost you $10 per month or $15. So you do things yourself. Or you can hire somebody in-house. You can hire a full-time or part-time bookkeeper who will help you get the job done. Think about establishing business bank accounts, okay? Business checking accounts, savings accounts, you name it. The thing is that you need to have things in the business's name, okay? And don't forget, you got to think about business licenses and permits. If you are in an industry that is regulated at the federal level or state level, you need to think about business licenses and permits. Don't forget. Step number 2, if you have no revenue, if you are a new business, I want you to write a business plan, please. And don't be stingy here. You need to put the cash. If you're trying to establish business credit and you are serious about it, okay, do not go online and sort of download those sort of crazy or those sort of weird business plan template. No. You want to pay for someone to write a compelling business plan for you. That is, of course, if you have no knack for writing this kind of literature. If you're good with business planning, if you're good with business literature, write it yourself. You can write it, not a problem. Okay, but you got to have the expertise though, because a business plan has specific components that you want to pay attention to, and it must be written professionally. That's what's going to take. Basically, you're going to get respect, right? From a bank, from a lender, from a net 30 vendor, net 45 vendor, okay? So you can DIY it. You can do it yourself. You can think about what the business strategy should be, what the financial statements should be. You can write the business plan yourself. You can outsource the task. Okay, you can go on sites such as Fiverr, Upwork, or Freelancer, or even better, you can hire a local business consultant. Right? Either way, please do not be stingy. You want to go for freelancers who don't go for freelancers who promise to write you a business plan for, say, $5, $10, or $25. Is your business worth $5? Talk to me about that. Is your business worth $10? No. So you really want to put quality out there, right? Quality is important. You can also use software to write business plan. We have covered the kind of business plan you want. We have covered this on other shows, but there are a lot of software, business plan softwares out there that can help you. For instance, you have Live Plan, you have Base Plan, you have Business Plan Pro, you have Enloop, and you have Go Small Biz. Okay, and please, whatever business plan software that you use, understand that a business plan, a compelling business plan, has some quintessential parts. You need to have an executive summary. You got to have a company description. You got to talk about the market analysis. You got to talk about the competitive analysis. You got to describe management and the organization. You got to have a breakdown of your products and services. You got to have a marketing plan, a sales strategy, the request for funding, and the financial projections. Very important, okay? And if you're interested in the topic, we have covered this on 2 shows. We have the first one on the screen, Life Plan versus Business Plan Pro versus Plan Guru versus Go Small Biz versus Business Sorter. That's the first one. And the second video is Life Plan versus Business Plan versus Enloop, the software to write your business plan yourself. The third thing you need to do, I want you to pay attention to your projected data. So you're just going around, you have no revenue, you have no credit, and you want folks to extend credit to you, right? To your business. But you better show them something. On what basis do you want them to extend your credit? Why should they trust your business and not your competitors? For example, well, money. The first thing I want you to think about, I want you to think about projected financial statements. So when we talk about projected financial statement, we are speaking about projected balance sheets, a projected income statement, a projected cash flow statements, and a projected statement of owner's equity. Owner's equity is very important because the lender or the net 30 vendor or net 45 vendor wants to see how much you, as the founder, has inputted in your business. What is the cash infusion that you have made to the business, right? Because if you have nothing, if you haven't put anything in the business, why should I lend you any money? So when we talk about cash flow projections for the business, this is really important. And the lender or the credit or the net 30 or net 45 vendor will pay attention to the 3 parts of a standard financial statement, of a standard cash flow statement rather. So when you look at a cash flow statement, you do have 3 parts. You have cash flows from operating activities, you have cash flows from investing activities, and you have cash flows from financing activities. Okay, they will pay attention to all those 3 parts to see exactly where the money is coming from. Talk to me about that. Okay, they will also pay attention to financial ratios. So when we speak about creating projected data, by the way, let's just dial this back. If you have no expertise about what I'm talking about, you can always hire someone, okay? You can hire an accountant, you can hire a financial analyst, but you need to actually entrust your business into the professional hands that you need to create the business plan, to create the projected data that you need, okay? You got to take care of financial ratios. Financial ratios are very important. For example, liquidity ratios, current ratios, quick ratios. You want to think about operating ratios, inventory turnover ratio, accounts receivable turnover ratio, return on asset, your cash cycle, the AP days, the accounts payable days. What I'm trying to say here is that you basically need to project some kind of confidence, some kind of impression about your business. All this data can be projected data because you have no revenue, you are new, so everything can be projected. Okay, but remember, first impression counts. And also, you might want to pay attention to the depth of expertise in the management team. Are you alone in this business venture, or do you have co-founders? Do you have executives? Do you have mentors? Do you have advisors? Mention those in your projected data or in your business plan. You also want to think about secured credit. Let me repeat that, secured credit. Okay, this is important. So when we talk about secured credit, obviously this conversation is about how to obtain business credit for a new business without revenue, right? Your business has no revenue. You have a startup. You are struggling right now. You're just having losses. You're just spending, charging all your expenses on credit cards, personal credit cards, debit cards, whatever, okay? You have no revenue. So what you want to do is, if you're trying to establish business credit, you need to think about secured business credit cards. Credit cards. Here we are again. Here we go again. It's all about starting from your financial institution. Who are you with right now? Who are you banking with? Talk to me about that. Are you banking with a credit union? Are you banking with a regular bank, national bank, community bank, regional bank? Who are you banking with? Okay, so, and when you go to the bank, if you are trying to make things very easy for yourself, you want to inquire about secured business credit. Because if you start talking about unsecured, the bank will be like, okay, you know what, this is too risky, we don't want that. But if you talk about secure business credit, they know that you are bringing the collateral to them anyway. So this is kind of cool, because your ass is covered, their ass is covered too. So it's a win-win situation. So you want to ask about secure business credit cards. You want to ask about secure business loans. You want to ask about secured business lines of credit. And don't forget, all I'm trying to say here is that if your business has no revenue, your business probably has some assets. Or if the business has no assets, you can get a secured business loan where the assets you're trying to buy will constitute the collateral with which you can back up the loan. Did you get that? So let me give you an example. We are talking about equipment financing. When you talk about equipment financing, you are basically asking the bank to give you a loan to buy equipment, which will become the collateral underlying or backing up the loan, the business loan. So you're not losing anything. The bank is not losing anything. So think about those things, okay? You also want to think about the MPR that you currently have with your current institution. MPR stands for multi-product relationship. Don't listen to what people say online about MPR, including all kinds of accounts. No, when we talk about MPR, we are talking about only asset accounts. You want to open checking accounts, savings accounts, investment accounts. Those are asset accounts. Credit cards and loans do not constitute, or at least they're not part of the MPR, at least how we defined it. And this term came from this show the first time. We coined it. We have been using this term for 10 years. This is a term that we use in our internal research, okay? And also, you can try an unsecured business loan to see if this will work. You never know. You might be lucky. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. In today's conversation, I'm just sitting here, and you're probably sitting there listening to me, and we are talking about, at least we're having a conversation about business credit for a new business without revenue. So I spoke to you about getting legit, writing a compelling business plan, using projected data, trying secured credit. Now I want to talk to you about personal credit. Obviously, you might be thinking, hey, listen, I'm just here we want to have a conversation about business credit. Why are we talking about personal credit? Well, guess what? If you have a new business and you have no business credit, the lender or the credit card issuer or the net 30 or net 45 vendor is going to check your credit, your personal credit, that is, unless you have established things from the get-go on an EIN only basis. In other words, you have established your business in such a way that there is a clear separation, there is a clear segregation between your personal affairs and your business's affairs. If you're able to have that divorce between those two types of affairs, then you're good to go. But either way, you need to work on having a stellar credit score at the personal level. Okay, you also need to have a strong MPR at the personal level. This can help also because the bank knows or the credit union sees, oh wow, this person has a lot of cash at the personal level. This is kind of cool. So if they now are asking for some kind of money on the business side, we can help them out. Okay, because they have a great view or a better idea of your transactional history with them. They see the cash inflows and cash outflows. And one thing I want to say, and this is a big decision time, as you're sitting there wondering how to build business credit for a new business with no revenue, I want you to do me a favor. Big decision time. Talk to a banker at a branch. Don't sit around in your office or on your couch at home and just applying for business credit online. You will be denied. Even better, don't even try to do even better. Go to a branch. You might think about calling. You can call them on over the phone. That's kind of cool also. But the best strategy is to go to a branch. You want to go to a branch. You want to have your business plan with you. You want to have projected data. You want to rehearse this. You want to have confidence, right? Be unstoppable. I want you to be unstoppable. Once you rehearse everything, you know exactly what you need to tell the banker. You are unstoppable. And don't forget to check your credit score also. You can check your credit score. It's free. You can actually you can get you can monitor your credit score for free, or you can pay for this service. It depends on what kind of service you need and the constellation of features that you want. But you can get it for free through Credit Karma, through annualcreditreport.com, through Nerd Wallet, Wallet Hub, you name it. And you also want to ask, while you are at the branch talking to the banker, you want to ask for business loan requirements for startups, right? So you have a clear idea of what the requirements are, what the requirements are when it comes to a startup loan, and what you need to do to get the loan or to get the credit card or to get the whatever credit you need to get. Have you thought about asset-backed funding? Hello? I'm talking to you about asset-based lending, aka asset-backed funding, aka collateralized funding. Because if your goal is, and I think I just briefly talked about it 5 minutes ago. So if you're trying to get business credit for a new business without revenue, you need to think about the kind of funding that makes the lender be at peace, makes the lender not look at you as a high risk, right? So here we are talking about asset-based lending. When we talk about asset-based lending, we are talking about collateralized lending. In other words, you are taking an asset from your balance sheet, from your company's balance sheet, and you are using that asset as the collateral, as the backup, as the security needed to actually buttress the loan, okay? And this collateral can be anything. It could be accounts receivable. It can be inventory. It could be machinery or equipment. It can be real estate, right? It could be a lot of things. So when we talk about accounts receivable, let's say if you are a service-based business that invoices customers, any receivables due within 30 to 90 days can be eligible as collateral for an asset-based loan. Okay? And if you operate a manufacturing, wholesale, or retail business, chances are you have a stockpile of inventory. Guess what? That inventory is money right there, just ka-ching, 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 sitting there at the warehouse. And this can be monetized. And the way you monetize that is by using the inventory as collateral. Okay? What about machinery and equipment? Let's say you want to buy machinery, you want to buy a vehicle, you want to buy a commercial kitchen appliance, you want to buy a computer system, you want to buy a server, but you don't have the cash, but you need to get this on credit. Guess what? You can collateralize the loan. You can do the same thing for real estate, okay? The bottom line here is that when we talk about asset-backed funding, this funding program, this business funding program has a lot of perks. For example, the APRs are usually low because again, here, the banks knows that you are, like, if something were to happen, they can repo the assets with no problem, because they will keep the title. So they will, in exchange for that assurance, if you will, they will give you a lower APR. Okay, and you also have the fact that you will need to pitch in a little bit, because they will fund the asset based on the LTV. Sometimes you have LTVs 85%, 90%. LTV stands for loan to value. So in other words, if the bank says, listen, we are cool with an LTV of 85%, that means that you might have to bring in the 15%. Okay, this is kind of similar to the down payment, if you will. Okay, if you're interested in this topic, there are 3 videos that I'm recommending to you. You have business loan with no credit check, how to get approved for a large loan no matter what. You have how to get a high limit credit card with bad credit and no deposit no matter what. And the third one is 10 rare business loans that approve you no matter what, up to $10 million. The last thing you need to do is to think about trade lines, folks. Okay, we are still having a conversation about how to establish business credit for a new business without revenue. So you're a startup, you have no revenue. Think about net 30 accounts, net 45 accounts. Big decision time. Big decision time. What are your needs right now? What are your company's needs right now? You need to think about the type of supplies that your business needs regularly and operationally. In other words, services or supplies you cannot do without. So those are 2 conditions. You need to make sure that the supplies or services that you need, you must need them regularly and operationally. So businesses need a variety of supplies. We all know that, right? From appliances to cabinets and countertops to doors and molding to electrical to electronics to hardware products to janitorial products to plumbing to safety signs to storage, the whole 9 yards. So you need to actually have an idea. First, you need to have an idea about the kind of supplies that you need. And then you also need to have an idea about what the kind of services that you need. What is the amount you expect to spend? If you have a business, you going to spend money. Whether you spend the money on credit or on debit, you are going to spend money, right? So you want to seek the right vendors for your business. You want to think about things like cost, quality and safety, delivery, right? Talk to me about that. Service. What is the social responsibility? What is their program, their CSR program, the corporate social responsibility? Talk to me about convenience and simplicity. Talk to me, please, about risk and agility. So those are things you want to pay attention to as you are thinking about picking a supplier, really, okay? And you also want to choose the net 30 vendors that offer large and free trade lines. And we have covered this on other shows. I'm going to give you a few here. So we have Granger. Granger reports to Dun & Bradstreet, Experian, Equifax, CreditSafe, SBFE, and NACM. Then you have Uline. They report to Dun & Bradstreet, Experian, Equifax, and CreditSafe. You have HD Supply. They report to Dun & Bradstreet, Experian, and Equifax. You have Office Depot, Office Max. They report to Dun & Bradstreet, Experian, and Equifax. You have Summa Office Supplies. They report to Dun & Bradstreet, Experian, and Equifax. You have Strategic Network Solutions. They report to Dun & Bradstreet, Experian, and CreditSafe. You have Quill. They report to Dun & Bradstreet, Experian, Equifax, and CreditSafe. And if you're interested in this topic, you can dig a little further. We have covered this on 2 shows. The top 7 net 30 vendors that approve large business trade lines no matter what, up to $250,000. And the top 10 easiest to get net 30 vendors for quickly building business credit. Thank you so much for your attention, folks. I really appreciate it. I was talking to you today about how to establish business credit for a new business without revenue. And first, you need to get legit. Number 2, trying to write a business plan. Number 3, you want to prepare projected sales data and other data. You want to think also about secured credit. Number 4. Number 5, trying to improve or boost your personal credit. Number 6, you want to think about asset-backed funding. And number 7, last but not the least, you want to think about trade lines. Thank you so much for your attention. I'll speak to you another time. But until then, remember, stay marvelous.